Good morning. This is Andrew from Trend Following Mentor. Today is February 2nd, 2014. It's a Sunday. And I'm just going to do a short video. And in today's video, what I want to talk about is making your trades applicable to the market. Or let's say another way, timing your trades to the market. Because really what the reality is that using a strategy of market timing is critical to your success as a trader and as a trend follower. Because when the market's up and rallying, the reality is that 3 out of 4 stocks will move up with the market. And on the other hand, when the market sells off, like we've been experiencing, 3 out of 4 stocks will decline with it. So you want to be in flow with that. So it really makes sense that you need to time your trades with the market so you're able to participate in these rallies and potentially profit and to avoid the big losses. Actually, what I do is I consult private traders, I consult prop traders, I consult hedge funds, I consult pretty much people that are just trading, in all the different fields. And I do it by the hour, or actually last week I was traveling and I do it on a daily basis. But what was interesting, and that's the reason why I'm making this video, is that I was in a firm, and we were discussing really about the possibility of market timing and the proverbial statements that some of the greatest moves are made, that if you miss them, then your returns are diminished. And what I tried to get expressed to them was that it's not what you're looking to make, it's really what you can lose. Because when you're really trading, anything can happen. And we've experienced some big volatility. You can have some, big gaps. And what I told them is I said, first of all, you want to trade without an opinion. Because your opinion, my opinion, doesn't mean anything. What we really want to do is measure the market. Measure what the market is doing. And what I talked to them about, I said, be a stock picker as you are, but also go with the flow. If the flow is increasing, then go with it. If it's starting to turn down, then be careful. So what I showed them, and I'm sharing with you, I mean, again, they're paying they're paying a lot of money for this, and you're getting this for free. But very simple rule. When the 10-period exponential is above the 30-period exponential, you want to look for trades from the long side. If that means breakout trades or trend retracements. And then another idea is when the 10 is below the 30, you might want to look for trades on the short positions only. This simple technique is going to keep you in sync with the market. It's not going to guarantee you every trade is going to work. There is no guarantees. But it's going to keep you on the right side of the market. And even more so, what you can do, there's many other tools in which I teach. I mean, what I've been talking about, this sell-off doesn't surprise me. And the question, we'll really see how much more it goes. And really, this is a key level here. There's somewhat of a support. Here you had a little bit of resistance support. If we take out here, hey, it can get a lot, could get a lot worse. Or, you know what? We can even rebound over the, these exponential moving averages. You kind of take it day by day. But why am I saying where we are now? And I'm going to be offering a service soon on basically the market direction and, actually advisory coming up in the future. But really where we're at, reading the market, is we have a very strong divergence on the MACD. You had new highs in the indice, yet you have new lows on the MACD. That in itself is very negative. The other negative is you have a lot of volume going into these down days. And besides that, we've had distribution days. Distribution days, you have two types of things. You have accumulation, which, very simply, you accumulate stocks. Not you, but the big traders, the institutions. And then you have distribution when they're selling. Well, we're at new highs, and we've had now 8 distribution days. As much as anything can happen, historically, that's a forebearer of some negative times. So, you tighten up your stops, be wary, because historically, when we've had situations like that, the market has turned down. But again, you take it day by day because you don't want to be a bear, you don't want to be a bull. You want to read what the market's telling you. Also, the AD line has been negative. Also, you have had extreme bullishness. Also, you've had extreme margin debt. Weigh all of these issues together to see where you're in at the market in order to determine which direction you want to trade. You want to go with the direction of the market. This is really what it's all about, is to timing your trades to the market. There is such a thing as being market, I don't want to say just timing, but being market aware. And this is some of the issues that I do with my hourly consulting. And again, it could be anything from hedge funds, banks, private traders, prop traders, that I do system development, I do risk management, I do money management, and really what I even say is most important is trading psychology. Because you can have, let's say, the best, well, if there's such a thing as best, trading system, but you don't have the right mental, let's say, mindset or trading psychology, it's for albeit, it isn't going to work. You need to learn how to think as a trader. You need to overcome fear and greed and be consistent. This is what I work with traders. And these traders are anything from, again, private traders to actually very experienced large traders. So again, this is Andrew from Trend Following Mentor. If I can help you anyway, please let me know. Here's my email, my phone number. And approximately 2 weeks out is when I have some openings. That's how kind of full I'm starting to get. But you can email me, you can call me, we can discuss what you're looking to accomplish, what has not been working for you, and figure out what we can do to help you. Thank you again.